Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2650th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video is coming at you on a Thursday night for trading. Friday the 13th. October 13th, Friday the 13th, no less. It's going to be risky, kids. Get ready. There's a lot of risk involved in trading. Make sure you never trade without stops. Put those stops in first before you ever get into a position. You will live to fight a lot longer if you do that. All right, traders. OMNI S&P. This very same chart was in last night's video. And I wrote, is this a pennant flag forming? Question mark, because it sure does look like it. And we opted for a buy trade in the S&P. And I'm going to add Thursday's bar in now. Look what it did. It went up through the top of the flag, turned around, reversed, came back down through the bottom, and blew the flag out. Now, our trade was to get long and get out on a rally. We never got a fill. It went up without us. We canceled the order, and that was it for the day. Turned around and dumped without us in it. But it did reach just about our buy point and then exploded. But we were not long, and then we, of course, canceled the orders. So nothing happened with us trading in S&P today, but looking at the formation, it blew right through the top and bottom of that flag, basically making it null and void. Now, the OMNI signal is completely mixed. It's neutral in most markets. It's bullish in one market. It's bearish in other markets. Completely mixed OMNI signals. So I'm not going to try to take a trade for trading on Friday the 13th. Well, there is an Oscarism setup that we may want to go with. So, look at your NASDAQ. This is another market that we had in last night's video. This exact same, in fact, let's put the averages back. This exact same chart was in last night's video. And in this chart, I said, you know, let's take the day out as well and we'll go over it. I said, look, we've got an Oscarism F flag. We just got above the 100 bar moving average. On Wednesday's close, it's above. Thursday, the market should hit the bottom of this flag and rally out. Now, what we were expecting is to get long, see it rally right about to the top of this juncture right here. Why? Well, because that's the top of very long-term resistance and the top of the flag. So I thought we'd get long, get out up there, and sidestep. Here's what happened. Thursday happened. Once again, we missed getting long by just a few points, and it exploded without us. But the important thing is this. Look what it did. Went right up to that resistance and stopped cold and then dropped. That's a failure. Right? So it failed at that resistance. So if I had to do anything for trading on Friday, I would sell a rally in the NASDAQ. And I actually have one set up in my pocket. I just don't know. I'll be sharing it with you cats because tomorrow is day one of OMNICAMP. The OMNICAMPers are coming into Vegas now, and I give them my undivided attention. But I wanted to point this out to you. We failed up there at the resistance. When it fails at the resistance, kids, look. What happens when you fail at that resistance? What happens when you fail at the resistance? What happened when we got near the resistance? Well, we just failed at it. Just thought I'd share that with you before I sign off and get ready for OMNICAMP. Traders, one more chart. Do you know why we had a bad day today? Do you know the major factor that pushed these markets down? Let me see if I can remember where that chart is. I have a chart for you. Let me look here. There it is. The 30-year T-bonds, the 10-year notes. They are just falling apart, and when interest rates go up, it's because bonds go down. Believe me, the Fed nor Jerome Powell does not have to say a single word to raise rates. When the bond market races down, rates go up automatically. Now look what the bond market just did. This is a much bigger move than you think. I mean, this is a 3 or 4 handle move right here. It was in the 114s, went down to the 110s. That's terrible. That is a failure, or it's just more of the same with bonds. So bonds are falling apart, making rates go higher. When rates go up, it absolutely weighs on the stock market, and I think you've seen a little bit of that today because that's a really big drop for one day. And the market sure did react, and the further we go down like this, the more the market will have to react. Now remember, we got down to 109. That was our call. We'd make it to 109, and the market would react because of that. And if bonds went back up, the market would probably recover. Well, both things did happen. But now look, bonds went back down. And as you've seen, you've already seen the chart, so did the stock market. Right? So it's got a lot to do with interest rates right now because interest rates are high enough to be at equilibrium. So when they move up a little, the market's going to feel it. Anyway, wanted to point all of that out to you traders. Let's go back and just scan that bond chart one more time. So it does look like it's probably going to try to take out the lows down here. What I was hoping we were getting, in all honesty, was some kind of a V bottom right here. I said, okay, maybe, just maybe, the bonds can bottom out down here. And if that's the case, that really takes a little bit of pressure off the stock market. But it's not quite what we're getting, right? It came right back down again. I was hoping that it would just V-bottom out of here and continue on, but it looks more to me like it wants to test the lows again. And if that's the case, so be it. All right, traders, I hope this helps. I will not be at my desk tomorrow. I will be helping my OMNIACs at OMNICAMP. Please be careful out there. Put your stops in first. And remember, stops are in. Emotions are out. Take care, kids. If you need me, just contact me. Even though I'm running OmniCamp, we always pay attention to the trading room and to our OMNIACs. Have a great weekend.